Welcome back. My name is Joanna Amberger. I'm the founder of 3 Financial Group, a financial planning firm located here in Honolulu, Hawaii. We help women and the LGBTQ community master their finances, and today we're continuing our multi-part series on investing basics for women. When investing, it's important to remember to focus on what you can control and avoid performance chasing and ignore the hype that you hear in the media. If you ask the average person on the street what impacts portfolio performance, most people would say it's the ability of a person or an investor to pick stocks and bonds to buy and sell or to time the market. When in fact, what research indicates is the most important component of portfolio performance over time is your asset allocation choice. That dictates about 91% of your portfolio performance over time. So by focusing on that component, you've already tackled the biggest factor that will affect your portfolio's performance. So let's take a look at what we mean by asset allocation. The first component of understanding asset allocation is to understand what an asset is. An asset is simply something you own that has value that you can trade or sell. In investing, there are 5 major categories of asset classes. We have cash, bonds, stocks, real estate, and commodities. Each of those categories can have subcategories, but those are the 5 major asset categories. First, I want to describe basically how asset allocation works in a simplified format. Asset allocation was pioneered by Dr. Harry Markowitz, who won the Nobel Prize, and he founded what's known as modern portfolio theory. What Dr. Markowitz did is he gathered information on how those 5 asset classes that we just went over, how they performed in the market over time. And then the next step he did was ask the computer to build different portfolios out of those 5 asset classes in different combinations. So one portfolio might have 50% stocks and bonds, the other one might have 60-40, a third one might have real estate thrown in. And the computer can create thousands of permutations of different kinds of portfolios with different asset classes. And then Dr. Markowitz ran each of those portfolios through the history of the market, and he asked the computer to graph the results of how those portfolios performed and compare the risk they took with the rate of return they were able to generate over that time period. And what you see on the screen are the results approximately of that analysis. And that line that you see is what's known as the efficient frontier. And the efficient frontier tells us something very important. First of all, it's important to know that above the line, there are no portfolios that we can invest in. Everyone would love to have a no-risk portfolio with a high rate of return, but that does not exist. So the first question you need to ask yourself is, how much risk are you comfortable taking? And there's a very delicate balance there. As a financial advisor, I can't tell you how much you should take. I can only help you measure how much you're comfortable with. So let's assume we've determined that your risk level is where that blue point is on the screen. Now, along that line, we can build a myriad of different portfolios with different combinations of those 5 asset classes, and they will all get different rates of return. And what you notice is that portfolio represented by the red circle, that's what we call the efficient portfolio, because given your level of risk, it's the portfolio that's most likely to result in the highest rate of return. Thank you for spending time with me today. I hope you've enjoyed the information. Please do continue watching. There are more parts to this series. If you've enjoyed the presentation, please subscribe to our newsletter. Join me on social media where you can find additional information and resources. Poke around on our website and you can learn more about 3 Financial's services and our philosophy. And consider reaching out to us today if you'd like more information or would like to schedule a time to talk to us.